Hello, welcome everybody to Cryptonomy. We're streaming right here from Thailand. Today we're going to talk everything crypto, right? So a little bit about me. I'm an investor. I started at 2019. I actually lost a few $1,000s there, but as Jesse Livermore says, that's the tuition cost, you know. So I studied right after that a lot, and read many books. And I started investing again 2022, 2023, and right now I'm at quadruple. So if you want to learn how to do it, want to learn a few things and how to actually make money in this cycle and the next cycle, then stay tuned. Let's get it. So actually, what we're going to talk about today is not if the price is going to break out, because it already did, right? Of course, there's a potential that this could be a fake out, of course. But of course, we will set some strategies on how to know if it's a fake out or not. And if it's a fake out, what should you do? If it's not, where are we going? And when should we take some profits? Because there's something that I was doing wrong, right? Every time we go up, I'll show you for example. If I was investing here, right? Let's get some square. This is my personal mistake. I'm sure a lot of people are doing it for this cycle. Even though I made money, I could have made more, right? So if I was investing here, right, then I would actually go up all the way there. I actually bought some Bitcoin at even here. Not a lot, like a few, but I did buy here. I bought there, and that's it. I just didn't buy anymore. Just taking profits. So pretty good so far. So here, if you invest right here, then let's say that the price does go up. Here it was very good, right? So you didn't have that problem. But you didn't know where you should take profits, right? Why should you wait this 6 months? I get it. Some people say, you hold it for 10 years, 5 years, whatever, blah, blah, blah. Okay, if you want to be rich when you're grandpa, sure, you can do that. That works for you, that's fine. But I'm not here to be a grandpa. I'm here to be a damn millionaire, right? I'm not going to wait 5 years to make a little bit and buy a car. No, I want to know when to stop, when to buy, when to hold, when to exit. You know, sometimes not being in the market is the best decision you can make. And actually, another thing that Jesse Livermore says, you know, if it's going down, then, you know, if the market is not going up, if you think it's not going up, then why the hell shouldn't you sell it, right? So we should also know when to sell, when to buy. For this here, I don't think I would have sold or bought. I wanted to stay out, right? I should have known to stay out because I was getting a lot of emotional stress. And, you know, you buy, you sell, you buy, you sell, you lose a few, you know, percents of your total profit for just stupid emotional mistakes. But nevertheless, I was able to start buying from here. I saw economic conditions. You know, there are three things that usually, let's talk about what usually makes the market good, right? How it goes up, how it goes down. There are usually three things. I've read hundreds of books, not hundreds, okay, like 20, 30. But nevertheless, it does count. And what they always say is there's like a triangle where you have to actually take care of. So let's draw a triangle because I don't think there's any triangles here. Oh, it's right there. Okay, if this is a triangle, there are three things that actually matter in the market. One is the mood, right? If something good happens and you're in a bad mood, then you're not really going to be happy for it, right? You're just going to be in a bad mood. The market will not go up if there's depression, if people don't have money, if people feeling like relaxed on holiday or something like this. Another one is actually economic conditions, right? Economic conditions. That's what keeps the ball rolling, okay? Yep. So if economic conditions are favorable, then that helps the market go up, right? For example, low interest rates, economic stimulus, money, you know, M2 supply, people talk about it, but also it's important, but it's not as important as what people think it is, because when the dollar is going down, economic and M2 supply is going up, then really just other currencies are, you know, it's just currency exchange. That's why the money supply goes up. So a lot of people, I think, made it clear now. So economic conditions, the market mood, and of course, the chart. The chart. A lot of people trade on the chart. What does the chart damn say? What does the damn chart say? You get all those right, you're rich. All right? You just focus on those three. Just focus on it's that simple. It's that simple. The mood, you read the news, you look at YouTube, you see people like, all-time high. But also when people are screaming all-time high, right? The mood is there, no problem. But also, even when, for example, in this period, what I noticed, what scared me, because this period, I had invested everything I had already. I wanted to invest more. I couldn't, because I didn't have money, right? Everything was all in. Well, you do have savings and stuff as well, of course, and other assets, but this is your limit. I'm not going to invest anymore. This is all I have left over for gambling or speculative, Depends. Some people gamble in crypto, but I like to call it speculating, right? You'll get it. For sure, some of you guys do more than me as well. So, here, a lot of people on YouTube were saying, we actually invested everything. We're all in, Yes, they were hype, but they were broke. Everybody was broke. So, the mood was right. Economic conditions weren't so good. Everybody ran out of money. Also, there was a lot of problems, right? There was fears of unemployment, interest rates going up, and blah, blah, blah. So the mood was maybe okay, 50-50, because people also didn't have money. Economic conditions was kind of trash, and the chart was overheated. RSI is screaming, and everything screaming. So of course it was going down. Nobody knew that, but you can take it into context. The mood can sometimes be misleading. And you have to read between the lines. Not that everybody's getting hyped. Read between what they say. That's my tip there. Here, on the other hand, economic conditions were good. They were very good. People, the market is forward-looking. So if people think interest rates are going down in the next 6 months, that's actually more bullish than when actually interest rates go down. Because when interest rates go down, historically speaking, the S&P 500 actually goes down. All right, goes down. And actually, let's just show this very quickly. I want to focus on today where we will actually get, but I'm going to show you how, when the interest rates go down, the goddamn stock market goes down. But when there's a hype about dropping interest rates, then that's where the market gets fueled. Because by the time interest rates are dropped, that's already priced in the market. You have to think about that, right? Think about that. Let me show you. So let's pull up essentially. Look, I know the charts are messy. They're meant for me, but we're just going to use them for the fact of online education. U.S. employment, U.S. interest rate, is it that? No, that's also important. Nothing is that. Federal funds rate. Okay. And let's go to the goddamn S&P. S&P, all right. You don't need to go further. Oh, here, look. Okay, interest rate go down. The first few percents are okay, but see, that gets priced in later. Here, for example. That's one thing. Also, this is the 4-year cycle broken in. Just I'll explain in another video. This matches something from history. There was 2 cases. The bear case, because it does happen sometimes, which is now out the way. Now the bull case comes in. The bull case that comes from I pick charts from because it repeats. History does not repeat, but it rhymes. And it rhymes a lot from previous. I use it a lot, and this is crazy accurate. For example, in here, 2 days ago, not 2 days ago, but 2 days before actually Bitcoin skyrockets, I posted this. And why? Because the VWAP got crushed. You see, it's squeezed. And when that squeezes, it tells me there's a big movement upside or downside. For example, look here, squeeze and bam. Here squeezed and bam. Here squeezed. Actually, that meant reversal. But in consolidation period, squeeze, go down, squeeze, do nothing, squeeze, go up. Same as here. Squeeze, go down. Here's another squeeze. Sorry. Here, squeeze, go down, like stop the movement, reversal. Squeeze, do nothing, squeeze up. But here, squeeze up. Squeeze, no nothing. But squeeze, the squeeze here was goddamn go up, and the squeeze here was goddamn go up. And that was, here, look at the date, July 9. When did Bitcoin actually break? This was July 9. Yeah, this was July 9. Squeeze July 8 or something. July 10 we were going up. We were going up. So I did say the clock is ticking for the final and most explosive part. Take price snippet of 2020. You know, I'll show you this price snippet. If you just copy paste it, you know, like scale it, transition, everything, easy math. You learn it in, you know, 6th grade. And it literally tells you where it's going. And I don't think, of course, we're going to 640, but it just shows you the kind of general trend, and it will deviate at some point. I'm sure it's going to deviate around maybe 2 something, or my first now target is 147, not 150, 147, and I'll explain why. History does not repeat, but it definitely rhymes. Fasten your seatbelt. And one day later, we were bam, we were goddamn bam, right? And then I posted another one. Here I set my target, and no one has a crystal ball, but everything is probable. Rallies usually last 1 to 2 months. It's just basic math. If you do this rally, then you get 1 to 2 months, and so on. So if you take this snippet here, and you know the length of it, you put it on that one. Usually, what you get is like bam, bam, done. So this thing is around just under 150. It's not going to go to 150. Maybe it will go, but 152, I don't know. I'm selling at 147. Start at least and see how the chart says the mood and economic conditions at the same time. That's that trick. So, where were we? Ah, yeah, interest rates. Okay, so look at here interest rates. Drop. Of course, that's COVID. So that's COVID. What you talking about? That's not accurate, right? Well, then tell me, what about 2008? What about here? We start drop, the price starts to drop. Okay, but that's 2 times, it doesn't mean it's true, right? Okay. Here, drop before even trades drop. And then we drop, that's the 2000. All right, that's 2008. That's 2020. So when people are happy about interest rates dropping, I'm not. I want you to hype up for goddamn interest rates dropping. So thank you, Jerome Powell and Trump, for this musical entertainment. Because the day interest rates are dropped, I'm gonna be packing my bags, or I'm gonna be packing my bags. All right, that's the peak. That's the peak. So don't buy on the interest rates drop. That means the economy just broke down. So that's 3 instances. Of course, the Federal Reserve before the 1980 had, you know, the Federal Reserve started, I think, around 1970, right? And before then, it's even you can see how they would used to behave is very different, right? Up and down, and so much up and down, and it's crazy. You know, the interest rates, they were at like 20% at some point here. Can you believe 20% interest rates? I mean, that's crazy. The Federal Reserve today is very different from the Federal Reserve in the 1970s, 80s, or 90s. Every 10 years, it was very different. There were tasks added to the Federal Reserve, more responsibilities, but right now, the Federal Reserve actually has just 2 responsibilities on top of the other ones they used to have, which is low employment rates and low inflation, or like, you know, good employment. You don't want deflation, just 2% inflation and, you know, healthy employment. And that's why we don't actually have a lot of data. We can only say for sure this period was the most similar to ours. You can see even the shape of how the Federal Reserve used to act, is acting, is different from the shenanigans here. But you can even see we still get interest rate drop, market drop, interest rate drop, market drop. Here even raising, I get it, but some, you know, I mean, that was the first few years of the Federal Reserve being operating, right? So they didn't know what the fuck what they're doing. They didn't know nothing. So it is what it is. Okay, with that out of the way, it's good we're not getting interest rate drops yet. Once you get it, there's high probabilistic chance the cycle is over. Okay? So, why are we getting a pullback now? What's happening? Let me see how many. Yeah, what's happening is because we actually hit target point. So if you look at that FIB channel, which I'm shocked nobody like looks at it, but if you take this one here and this one here and extend it, that's like Fibonacci sequence on a, you know, like that type of shape of thing, then you actually get some very important points you can look towards. If you notice, when we broke out of here, we did one line, resisted, up, and then we blocked, right? Even though I don't think we're gonna go 3 lines up, we're gonna go maybe go like 2 lines up or something like that. Keep that in mind. So here broke, up, resisted. This is what that counts for, and maybe up here. So his first target is, you know, 150, 147, 148, something like that. That's the point. And if you look at it, see, if you take, okay, I'll do it again. Do it again. If you take from here, I don't like to take the wicks because the wicks are just, you know, trim the noise, the emotions. We don't want that. Here, no wick as well, and you get the wrong, you know, the same target. But for the sake of who wants the wicks too, damn, bam, you almost get something similar. And we're following it. So usually what you get is in markets something like that. And maybe we can show it to breakout, tick, 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 breakout, then tick, tick, and like something, you know. Then you consolidate, either you break out or move. But that's what happens, right? Same here. Breakout, you know, tick, 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 breakout, boom, consolidate to something else. You get that a lot. Here, breakout, tick, breakout, finish. Except if you get this is kind of different, but also breakout, tick, breakout, finish, right? Here you got 1, 2, 3, I would say, but you know, I'm not gonna bet on that. I ain't betting on that. That's the banana zone. We don't have that kind of market structure right now, and we don't have that kind of market structure right now. What we're having is very slow grinding up stairs. That's the mood. That's what the economic conditions kind of give us right now, and that's what the chart literally shows. So we'll move with that. So first point, where's the target? Take first profits. It's 148, $150,000 for 1 Bitcoin. That's what the first chart tells us. Another one. Okay, so again, ding, ding, and you get 1.618, the FIB sequence on a different scale, right? Also, you need to watch out for all the indicators. That'll be very important for you. Let's pull up the 3-day chart and let's see what this says. So there's a lot of lines. Don't worry. Let's just focus on this yellow and that and the price. And let's close that and let's close. That's the buy cycle. Always keep it on. I don't want to forget to turn it off. So that when that clicks, I'm selling everything. Okay. With that said, you see the resistance here again. It just shows different kind of, you know, like here. Check. This one goes from here to, you know, this side, this channel, and we sometimes break down, come inside, break down, come inside. That's what we've been doing the whole time. This one measures just that channel here. This one measures a very, very long-term channel, okay? And we're just trying to break out of this one. So what I think is this is going to be very hard level. That's 1. 2, 1.618. If you take from here to here, you see this from the bottom to the top of this run. You see this run, the bottom to the top. And if you take that, then you do get very good market structure. It separates that with that. It also takes that into account. That acted as a very big resistance here, so it does show something, right? And if you look, for example, if we crack here, then we're probably going to be here. Yeah, maybe you like bounce above it a little bit. So I think that's the right price. Yeah. Next, let's see where it goes. We're not doing PTC dominance right now. So this is going to be a very important line for us to break as well. We've been struggling here, working through that channel. That line goes from here, way far here. It's a very important line. You can see we just couldn't break on it the first time. That was the first type of resistance. Yeah, it is what it is. Oh, there's, by the way, bull cross, golden cross, just happened, I think. 200-day SMA and 200-day EMA. You know, when that happens, usually that means bull baby. That means bull baby. See? Yeah, didn't happen till here. Right? We bear, bull, bam, bear, bull, sure, bam. Like, does mean that we're almost near. You know, we're almost near our target. Same as here. See? This whole cycle, this golden cross, didn't miss. Didn't miss. It didn't miss. Let's look at that one here. If we take the 2 weeks, this way I analyzed if this indicator is actually hitting or missing. So the red is missing. The yellow means top, which hit top. You know, the green is hit bottom. Hit means success, right? And that's when the green line crosses above the yellow line, right? Let's explain a little bit. If the green line crosses above, so that's the Fisher line. Above the yellow line, that means bullish. If the green goes down below the yellow, that's bearish. And it's like the RSI, the top there is overheated, the bottom is oversold. So that was also bullish. We're going to be waiting for it to cross down. Once it crosses down, that could be a signal. It's accurate if it crosses and continues, not fake out. You know, you can know within like a week or something, right? Pretty good chances if you mix it with another indicators, right? Let's look at the MACD as well. The MACD is roaring on the 2 weeks. It's good. We bounced. We're continuing. That's momentum. We turned green again. Very beautiful. It's very, very, very beautiful, especially on the 2 weeks. That's strong. That's very strong. So indicators say higher for longer. One thing that worries me is actually the if we go to the daily, that volume there, that spike in volume, red volume, that's not good. That's not good. See, that means heated and near the top, which is not good, but one thing only says that, right? And the RSI, the bearish diversions in the RSI. Now, that's the chart we posted on X, right? Let me explain it a little bit. Actually, I also predicted the breakout here. If you go watch one of my first videos, I said like 2nd November we're gonna break out based on some long analysis, right? It's in that video. It's in that video. I was all in here. Of course, I sold. I lost a few percents on the way here. It's okay, but I made sure I got myself under track and I bought everything and I read it up. Here I haven't sold much. I think just a little bit here, but I bought it back on the way up and bam, beautiful, beautiful. But majority of my everything is I bought here, this zone. I was too scared here, but I did a little bit, and majority is here. So let's just move that away. I did it a long time, don't want to lose it, but we're gonna try and do it again. Okay. So if we take a bars pattern, again, history does not repeat, but it damn rhymes. It damn rhymes. All right, let's take out this deviation. Let's just pull it up from here to there. Okay. Like what? Why are you taking the 2020-21 cycle in 2 hour cycle, because it's so damn similar. It's crazy similar. Where is the similarity? Here's the similarity. If you point that, I hope I can get it again. I don't know how I saw it before, but I damned it, right? So that is like that. That goes, yeah, like that. So how do we do that again? Why? How did I see that before? Well, this hump here. It's like this hump here. This here is like kind of this here. And this here is like this here. It's like this here, right? You see it now? Then a hump, I go down, and then banana zone. You see it? Do you see it? I'm sure you see it. This here is this here, right? This here is this here with the blue line. You see the blue line? Yeah, it's different bottom, but like, do you see it? Okay. Up, breakout, retest, breakout, retest, and continue to the moon. So if we can get that to work this time, that'll be very useful. Maybe just pick up the 2 week. Maybe that's what we did before. Let's take the bottom. Let's take the top. Let's take that. So this here. Yep. It's tracking it very damn well. I think we took the 1 week before, but it doesn't matter. I'm just showing you how to do it yourself and learn some of the tactics. So I see similarities in charts that happened before. I copy it, I paste it, I translate it, edit it a little bit, and I actually get it in the chart. I just change the air conditioned temperature. And then you do get what you do get, right? So, of course, the first one I really worked hard on making it nice, well, except that wick down there, but nevertheless, it's damn tracking it, okay? It's damn tracking it, and it's tracking it very well. If you go to the weekly, nevertheless, it did break on the same pattern. And of course, we're not going to the moon like that, what that says, but it shows you we are in the banana zone type phase according to history. Very, very, very well rhyming. I was able to use it myself right here and right here to know there could be something. Not surely, probabilistically, there could be something. So, next, right? I don't think we're going up there. Again, I think we're gonna deviate at that point, possibly, don't know. It's harder to project very far in the future. It's easier to project in the next 2-3 months on the exact price action. Kinda. Good luck. Restore. Okay, here is nothing interesting. Here, Jesse Livermore. Nah, I'm gonna keep this one for another video. Jesse Livermore speculative chart. That with that go hand in hand. Go hand in hand. It's one thing to say one data point points to the banana zone, okay? It's another thing to say 2 data points point to that. And it's an all-in situation when 3 data points point to that, which I only have 2 for now. But This one is for another video. The Jesse Livermore speculative chart. If you want to go research about it now, do it. It's about the channels, the points, with watching the volume, plus, plus, minus, plus, minus, plus, minus. And then here should be plus, 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 and then here 11 should be minus there. Just a run on that theory in case we don't make a video. So it's timestamped in history. We're going to break out of that channel, a little bit consolidate, do that's the 8-point here, the 9-point, and the 10-point here. Not sure where the 10 point's going to happen, but usually the market, the cycle should end around this zone, right? October, November, December. And then we go down into oblivion for the rest of 2026. And that's when we start buying at the end of 2026. So actually, I don't know, but it should be in that zone, right? 2022, yeah, at the end, right? Should be somewhere there. We're gonna do more research when that time comes, but sometime 2026, we start buying again. And we fix our mistakes that we did this cycle and improve and become goddamn millionaires. That's the goddamn point. Speaking of the bearish diversions, it's right here on the weekly. Bear, bear, bear. You see the bull here? It just means going up. Bear, 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 bear. I don't like that. And here as well, you know, lower, 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 higher, higher, higher. It's not gonna work unless here we deviate. We have something promising here. I'm gonna show you a little bit. I think we're breaking out of this, which is a very healthy sign. I hope we do break out, and we're forming higher lows and higher highs, which is very good. If you go out, then we can break that bearish divergence and call it a very good day. Oh, another thing? Yeah. Talking about this copy-paste type of thing. Yeah. If we do ghost feed bars pattern, if we take that, we take here. No. Where was that one? This here. Okay. Where did I take that one from? It just matches to the point. It's crazy. Das again says 140 something, right? That's my first target, as you can see here. It's the 2.41, should be 2.6, but I'm gonna just start selling before, not the 150, but I'm gonna start selling here. That's my second target for September, October. 3.618, 200, November, December is 4.618. If you're interested about this line, it goes from here to actually the bottom here, right? I do it to here because it fits very well. Look at that. Look at that perfection here. Look at that perfection. Look at that perfection. It's crazy. So I keep it there. This is the FOMC meetings, the yellow lines. But I don't know where I got this one from. It is important because it matches so well. And this one tells you we're going up end of this month. End of this month, we should be going up. We end by mid-August, which matches with our 1 to 2 month rally. Mid-August, we should be at 150, 145, something like that. Again, not surely, probabilistically speaking. If anything changes, I'll make sure I'll try to update here. But yeah, I will also next time try and get where I got this snippet from, because it does look like it's tracking it. Let's try again here. I think maybe on the daily. So again, usually it's copy paste. Also, life is symmetrical. If you see here the symmetry, you see it. This, that. Okay, let me show you a bigger symmetry. This is symmetrical. Oh no, here. This is symmetrical. How it shapes two W's, right? A whole. It is kind of symmetrical. If you look at that here, there's usually symmetry in the market. It's not an exact copy paste, just like reflection kind of thing. And that's why I take most recent snippets and and it does work out very well for me. Yep, it's that one. Just expand it and you get that. Yep, okay, that's the snippet. That's what it says. We're going to keep tracking it. For now, it's going to be doing nothing, consolidating and going. I'll show you what shape it's going to go. This shape is very, so it's the last thing. We're not going to keep it too long. Very relevant in the market, especially this one. Look at that. See that? Bam. That's very bullish. Where do we also see it? Where do we also see it? Like kind of here. I think we're, yeah, here. You see that? Here. This one. Also does it here. I think this, yep, this is what we're, I think this is what we're going to do. Not surely, but this cycle, this pattern has been very reliable, I would say. And I'll put my money on that, yeah. Here again, see that? Just grind up and then bam. So that's it for today. Thank you for watching. You'll see in another one. Hopefully you learned something today. And remember, the most important thing you should learn from today is mood, economic conditions, and chart. If those three signal bullish, then you should signal bullish. If they signal bearish, then don't be afraid to sell the market. The only way you can know if you're right is to bet, right? But make sure you don't bet everything in one time, so you have some, ammo to try again. Bye.